What do we got here? We got volume profiles today. If you do want this graphic is uploaded on my Twitter at Errol underscore Glorious King LeBron J. No, I'm just kidding. At Errol underscore Coleman, Colemann. You could go ahead and take the graphic off of there, but I posted this today. Volume profiles. This is pretty much where everything in auction market theory. We're going to have a dope graphic for auction market theory. I'm going to finish that we'll have for next stream. But anyways, this is volume profile, and I think these graphics really help break down the details of it. So we got point of control. Point of control, it's a price level with the highest traded volume. These levels will typically have high levels of liquidity. Why? Because of the highest traded volume. And, high volume, high liquidity. This represents the fair value for the market. What is fair value? Fair value would be an area where buyers and sellers are agreeing upon price. How do you know? What does that visually look like when buyers and sellers are agreeing upon price? That typically is going to look like a consolidation, a range-bound market. Neither buyers, neither sellers are more aggressive than the other, which creates fair value. Buyers and sellers are agreeing upon the current price at this time right now. They might not agree on this price in an hour from now, the next day, whatever. But at this time right now, this is fair value. Buyers and sellers are agreeing upon price for this moment. That's where we get the value area. And it often acts as a magnet for price. So if you're ever using, point of control, those type of areas, it could be wise to use this as an area. Let's say we're short right now for whatever reason right here. It would be wise to take some of your positions, scale out some right here. There's too much uncertainty for a continuation at the POC, the people of color. No, I'm just kidding. The point of control. And this is just something to look at. You can look at it, you can back test it. You will see that price typically has some type of reaction whenever we get to the POC. We could have a continuation, but again, there's a lot of uncertainty in the market. We don't know what's going to be happening. So the POC is the level that I found personally beneficial and effective to enter / scale out of positions. It's an important area called a POI, a point of interest. I'll start using that acronym a little bit more often as well, but it's another point of interest. Whether you're using it to enter, exit, scale out, add, it's a point of interest. Now we got value areas. We just talked about the value area. The value area is going to be the price range where 70% of the volume is traded. Talked about this last time. I'll bring up a distribution curve last time. This is a distribution curve, but really we look at bell curves all the time with Tasty. Yeah. I know Tom and Tony aren't a big fan of volume profiles, but I'm like, hey guys, it also uses a bell curve. Yeah. And hopefully that helps my case a little bit. So inside the bell curve with the statistics right here, this value area high and this value area low, where it's highlighted right here. This is where 70% of the volume was traded for this bell curve, for this distribution of volume. Price is more likely to be a balanced market, aka a range-bound market in these areas. If price comes into this area, it's just more likely to be a range-bound market. That is why 70% of the volume is traded within this area. So again, if you're a directional trader and you're on a larger time frame value area, it's just more of a gamble holding directional trades through this area, right? If it gets to this area, maybe start scaling out. If you see weakness, you can maybe start getting short, but holding a directional trade through a larger, that's devious work. Holding a directional trade, hey, to each their own, but holding a directional trade on a larger time frame value area to expect it to go straight through is just so much more of a gamble. Again, it doesn't mean it won't work out, but you're going to get so much more choppiness here. It's not going to be as fluid. Why is that? What's going on behind the orders for it to do that? There's a lot more orders in this area. There's more volume traded. There's more buying and selling for it to knock the price up a little bit, shoot it down a little bit. There's just more stuff, right? It's a thicker market right here. The market's a lot thinner outside of these areas. And because the market's a lot thinner outside of these areas, that's why the market tends to be more directional and to trend exactly in a thinner market. Price going into this zone is for some traders exactly what they've been waiting for. Yeah. So
like your bread and butter is trading might be vice versa for them in our aspect.
Right. Absolutely. I just know me personally, my A+ trades are outside of here. Right. But it's just because I personally haven't built a strong playbook to trade in this range yet. I'm working on it right now. Like I'm working on it and I'm getting a lot more comfortable and confident. I just need to do a little bit more back testing and data and all that kind of stuff. But I'm going to be probably taking these trades a little bit more often once I am done with that back testing and all that kind of stuff. So again, it's not to say this is do this or do that or what I'm doing is better. It's just the fact that just understand the basic components of it. It tends to range a little bit more. So if you have a playbook for a ranging market, if you have a playbook for when price goes back into the value area, execute your playbook. High volume nodes. These are going to be price levels with peak trading volume. So you can see right down here, I have circled this area right here, this area right here. These are our high volume nodes, and they can act as support or resistance zones, whatever you want to call it, supply, demand, support, resistance. But it indicates market interest in consolidation. Why does it indicate market interest? Because these high volume nodes area, there's more trading activity being facilitated in these areas, hence more or stronger market interest. That's one of the nice things about using some volume-based indicators. We don't really have to guess if or when traders or market participants are interested where the current price is at, whether that's long or short. We're not talking about that right now. We're just talking about market interest. We don't have to guess if more market participants are interested in a specific area because we can just see it by the volume. We can just look at the facts, look at the car facts, look at the trade facts. The high volume node areas, there is more market interest there. That is why more orders have been facilitated. Again, these levels aren't going to tell you whether to get long, whether to get short, but it's another point of interest. It's another area that we can just, gain a little bit more market context from. So I think these graphics pretty much help break down the different details of the volume profile, because this is a volume profile, this is a volume profile, this is a volume profile. But what is the point of control? What does that mean? What is the value areas? What does that mean? What's an HVN? What's this terminology I see, and what does that mean? So I'm just kind of creating graphics that would have helped me break down some of these concepts a little easier. But that's volume profile for us. Catch up on some of these comments.
Yeah.
Wish we would get volume profiles in the TT platform. Volume profile is in the Tasty Trade platform. The volume profile, we do have it on Tasty Trade. I could pull it up here in a moment. I wish I could find free footprint charts. I feel you on that, big deal. When I was first getting into it, I was like looking at trading views. I was looking here, and I felt the same exact way. I know exactly what you mean. No, I feel you on that. Definitely big deal. I don't like TOS with their numbers instead of letters. Bro, I'm not gonna lie. It like volume profile, most volume profiles, and maybe it's because most developers for the software aren't focusing too much on volume profile, but most volume profiles on most softwares are not the best, to say the least. And because of that, I always had a difficult time grasping volume profile and how to use it, how to apply it. I didn't understand. Like, it's weird how it's plotted on most charts and all of that.
A lot of them are, I feel, a little underdeveloped.
Yeah, I would agree.
For sure.
I would agree. We're getting a little bit of a rally right now. Hopefully we get some weakness into the market. I'm gonna have to cut this position. Let me show where the volume node is. So if you're getting long to this value area, this is a point of reference that you can personally use. That value area is from last week. So I'm gonna go week, I'm gonna go develop, I'm gonna go previous 1 week, I'm gonna go apply, and it's gonna adjust that volume profile here. So this is where we got this value area. Again, just to put a little visual to it, this value area was built because the market was ranging pretty much all last week. And that's where that value area comes from. So if we do see price acceptance into this value area here, the point of control sitting right here. If you're looking to get long, this is a very wise area to start taking some of your position off. Again, if we see price acceptance here, yeah, we could go to this point of control. I would take some off here. But it's likely we could head to the opposite side of this value range. It's not to say we're going to trade through it, but it is likely we could get to the opposite side. Again, this is a good point to scale out some position, or if you're a short position. I'm not risking all the way to up here, but if you do have like a longer swing short on or something like that, this point of control could be a great area to manage your risk at. Because if we see a lot of market interest above this point of control, it's not surprising if we see market upside.
Yeah.
I'm saying. But anyways, that's what we got right now. Let's go back to the 5-minute chart. We're getting a rally right now. Like, this market's rallying. We got this aggressive push. We're getting a lot of selling on the bid right here. It's an imbalance, but this only has 9 on the offer. I don't really like to consider it an imbalance too much personally on the bid and ask if it's not at least 100 on the offer. Because that just lets me know price just wasn't really traded up here. Like, if this is 0, this is still an imbalance on the bid, but they never gave this an opportunity to see what buyers were really right here. So if this said like 100 and this said 220, that would mean a little bit more. But this 220 on the bid doesn't mean too much, just because price didn't even really get a trade on the offer up here yet. The volatility of the market just picked up. You can visually see the volatility of the market picking up as we get into this area. That lets us know it's an area of interest. Not surprising, because it is a value area that we do have marked off. What I really hope to see, more rejection. I want to sell off. I would really hope for a sell off. I don't want price to start consolidating and holding with volume in here. It's not a good sign for me, not a good sign for any other shorter term short sellers. But I would love to see a sell off. I would love to see price continue to get rejected here. And I would love sometime this week us to then come and take out. This is too symmetrical. The price got to come take this out eventually. But I would love to see price come all the way down here.
Yeah.
And then even lower. Personally, if we do get all the way down, I just changed the color on this, my bad. If we do get all the way down here, we cleared today's low, and we start holding beneath this level, I'm going to be even more bearish and more confident that we'll go down to this level. But we are coming to a close. We'll see what we get.